All right, well, joining me now for more on Bretton Woods and the global financial system from Westport, Connecticut is Peter Schiff. He's the president of Euro-Pacific Capital. Peter, thank you for being here. Now, we have some of the biggest names in the economy gathered at Bretton Woods trying to remake the global economic order, or so they say. But do you get the sense that this is nothing more than a fancy burial, funeral send-off for the U.S. economy?
Well, I don't really know what they're going to discuss. I know what they should be discussing. The problem for the global economy is the dollar. The dollar is serving as the reserve currency, and that is the problem because the dollar has no intrinsic value on its own. You see, prior to the dollar becoming the reserve currency, gold was the reserve, and gold has intrinsic value. You cannot simply create gold out of thin air. It costs a lot of money to find it and extract it from the ground, and so it's scarce and it has real value. But you can print money out of thin air, as Ben Bernanke is doing, and the United States has abused the privilege of issuing a global a reserve currency, and we are exporting our inflationary, irresponsible monetary policies all around the world, and we are poisoning the global monetary system. So the only solution is to jettison the dollar and to re-embrace gold as the reserve for fiat currency, so that they would no longer be fiat, so that they would be backed by something of legitimate value, and central banks could raise interest rates without having to worry about the impact that would have on their currencies versus the dollar, because part of the problem is interest rates are too low, and that is fueling asset bubbles and misallocations and distortion of resources. But the reason they're low is everybody is afraid of crashing the dollar. And the reason the United States is able to run these huge budget deficits is because the world is lending it the money. And the world would not lend us all this money if the dollar were not the reserve currency.
But Peter, the reality is that folks are not talking about moving back to the gold standard. In fact, we're talking about yet another round of quantitative easing, QE3. So what in the world makes you think that people here in Washington and people over in New York will somehow wake up and see the actual economic impacts of continuing to print without any thought of the consequences?
Well, I don't think they're going to see it. I said what they should be talking about. I mean, there's such a lack of understanding among the hierarchy or the elite about economics. People actually think that a cheap money is good, that debasing your currency is good. Look at the Japanese. They had this huge earthquake and tsunami, and they added insult to injury by debasing their currency instead of letting it rise, which would have reduced the cost of rebuilding after the quake. Now they're making it more expensive. So you have this conventional wisdom that is wrong. And there's also this wisdom out there that the world needs to prop up the American economy so we can keep consuming what they make. But that is why the global economy is so weak. That is the source of these imbalances. We can't afford all the products that the world is selling us. The world would be better off consuming those products themselves rather than vendor financing Americans who are too broke to pay them back. And our government is spending a tremendous amount of money. And we're spending money, and it is depriving the rest of the world of the money that they need to grow their own economies.
It seems like a simple question to answer. Should Icelanders repay millions of dollars they're not sure they legally owe in the first place? But the nation is split on this referendum. Some polls put the yes camp ahead, some the no. All of them say it's very, very close.
We have two bad choices to choose from, and in that situation, you have to choose the one which is less bad, and that's the yes.
I'm gonna vote no, because I just don't think it's fair that the Icelandic people pay for some big companies that make these mistakes.
Now this feels like quite a lot of money. It's about 160,000 Icelandic krona. That's about 1,400 US dollars. It's the estimated debt that's sitting on the heads of every man, woman and child in this country once you take off the amount that's owed by this bank for getting Iceland into the problems in the first place. There's a $5 billion bill left by the collapse of Landsbanki in 2008. Its internet outfit, iSave, left thousands of British and Dutch customers out of pocket. Iceland's government says its people should pay at least some of that money back.
We have a deal on the table that is worth making. We need to get this issue out of the way, and that's why I'm wholeheartedly supporting the yes campaign.
The No campaign has some Icelandic celebrities on side, like singer Egil Olafsson. He's uncomfortable about the people picking up the bank's tab and says the numbers are far too vague.
Why should we alone pay for that bill? And also this, that we don't know the total sum of the bill. We don't understand that. Why can't we get the total sum?
Voting no could mean a lengthy court battle over liability with the British and Dutch governments, and possibly a troublesome ride to future EU membership. A yes vote will give this independent-minded little country a chance to get on rebuilding its shattered economy.
There are two very, very different perspectives, different directives that govern the behavior of the European Central Bank and the US Federal Reserve. Because in the case of Europe, it's a one-sided directive. Your only job is to prevent inflation. And in the case of the US, it's a more balanced, maintain employment and price stability.
The delegates who came here in 1944 gave the U.S. and the dollar the prime place in the world. Does the world need a leader like that now? And if so, which economy? Is it still the United States?
Well, there's a big question whether the U.S. Dollar should be the main reserve currency. And in fact, it no longer is, because it maybe accounts for 2/3 of the monetary reserves. But there's the euro is an alternative, and there's a lot of diversification into other currencies, and even more into commodities. Not only gold, but actually oil. Oil is now an asset class for investors, and that has put some upward pressure on commodities.
Hello everyone, welcome to Global Government News. Today is Saturday, April 9th, 2011, and I'm Darko. Welcome everyone to this news bulletin. This is my website. If you're new, Global Government News is ggnonline.com. That's www.ggnonline.com. I usually go through this little introduction here where if you're new, like I said, you can subscribe via email and FeedBurner. You just enter your email address, and when I post videos, you'll get notified. And also here, in this Blogger, if you have a Blogger account, you can follow me there, or if you have a Facebook account, and I get to the bottom here, you can click on this button and you can follow me there on Facebook. Alright, so we're starting with the economy here in this first video. U.S. stocks drop as oil's jump spurs concern economy will stall. U.S. stocks fell this week, preventing the third straight gain for the S&P's index as crude oil's rally to a 30-month high spurred concern that the global economy will slow. And then moving on to commodities, there we go, still going up and up and up and up. Brent crude is now at $126 a barrel. And I've been reporting on how it can go to 175, 200 easily, and it looks like it's going that direction, guys. It was up $3.98 a barrel. And then we have heating oil futures up $11, natural gas down a little bit, and then we move on to basically agricultural commodities. Cocoa is down a decent amount, $25 and $17. Then coffee was up $2, and corn up $7. Cotton down $5. Wheat up $23 and $9. And then moving down here to soy, up $6 and $1. Then in the precious metals, we have copper was up $8.50. That's a pretty good jump. And gold, too, up $14.80. Gold now about to hit the $1,500 mark, which means $2,000 an ounce. It seems to be coming soon, just like the big oil, the high oil. Silver, look at silver, broke the $40 mark, $40.60 per ounce. It was up $1.05 an ounce. And then we move on to crude oil. Crude oil surges above $126 is the dollar slumps. So all this good news for precious metals, and oil is actually bad for the dollar. Oil surged to a 32-month high on Friday above $126 a barrel on concerns about long-term supply cuts, while expectations of more interest rate hikes in Europe drove the euro to a 15-month peak against the U.S. dollar. And then we have oil prices surge to fresh 2.5-year highs. So it says oil prices have surged to a 2.5-year high on concern about supply and a weaker dollar. Crude at $175. Oil traders stress test the future. Oil at $175 a barrel. Copper at $12,000 a ton, and corn at $10 a bushel as commodity prices rally. The world's largest trading houses have been busy stress testing to be sure their finances can withstand the super spike. You can go in there and check that out. Most of my links are posted unless I have technical difficulties or I just run out of room. You can find all these links in the video's description on YouTube, so just check that out. We have gold hits record, silver soars on dollar decline. Then Treasury 10-year note slides for longest this year as inflation bets rise. Then mortgage rates edge up. 30-year fixed is at 4.87%. Expectations of rising rates propel euro higher. Then I guess interest rate hike is looking like it's going to give a boost to the euro. And then we have U.S. to delay China currency report. And this is from the AFP, but carried on the activist post. The U.S. Treasury Department on Friday said it would delay a report that could label China a currency manipulator until at least May. And I always say they're currency manipulators, that the U.S. isn't. EU wants more Portugal austerity as EU unions protest. So it says EU finance ministers on Saturday urged Portugal to commit to reforms and defended the region's austerity steps as tens of thousands of European workers protested in Budapest against spending cuts. And then we have IMF Managing Director Dominique Strauss-Kahn calls for new global approaches to a post-crisis world. And what does that consist of? IMF chief wants free market theories overhauled. And so the liberal theories that have guided the global economy for the last 30 years need to be overhauled, according to the head of the IMF. And we're going to move on here to EcoBank opens China's desk to manage Africa loans. A Pan-African bank, EcoBank Transnational Incorporated, will open a China desk next week aimed at easing the flow of Chinese loans for African infrastructure projects. Remember I was talking about, that was Reuters that reported that, about like a big economic kind of war going on silently between China and the West going on in Africa over resources and, of course, loans, because that's the big business of the elites, is loaning out money. It says here Europe, and of course the best way they do it is by coercing countries, sovereign nations. Well, I don't really think countries in Africa are sovereign anymore, being that they consider themselves part of the African Union. But either way, they don't just take, like Portugal, they don't just take loans. They are coerced into them. Originally, Portugal was staunchly against it, and then all of a sudden they're taking it. You know what I'm saying? It's intimidation and coercion. That's how they get these loans going. Europe, California discuss harmonized carbon market, and said it could soon be working in sync after a meeting between the EU Climate Commissioner and California Governor Jerry Brown. And the world's largest cap-and-trade scheme was opened. And it says here for greenhouse gases in 2005, and California is aiming to open the second largest this year. Then we have anti-carbon protesters in Blacktown. It's in Australia. They don't want their carbon tax. It says here January new home sales lowest in nearly 50 years, and debt jumped $54 billion in 8 days preceding Obama-Boehner deal to cut $38 billion for the rest of the year. Then workers brace for effective government showdown. Of course, they show a Native American, which probably makes up about 1% of the entire federal workforce, just to make you feel nice and sorry and that, and federal budget shut avoided, and 2012 budget fight looms, talking about cutting the troops' pay and all this other propaganda BS, right? But the truth of the matter is both of these parties supported this, right? This government shutdown if they didn't get what they wanted. And what does that imply? It implies that they don't want the government to actually cease to exist. Because if it does, like I said, just like the U.S. dollar, if the government ceases to exist for 4 days, people will realize that they don't need them. And that will scare the living shit out of the elites. It says here, Boehner-Obama deal permits funding for group that does 910 abortions a day. This is GGN, and I'm Darko. Thank you.